Dollarama. DOLTSX. This is a stage 4 candidate I picked up. An alert for that, and check it out, guys. What do? Always start with the monthly. If the monthly ain't giving you the trend that you're looking for, then stop. There's a whole bunch of reasons to stop when you're doing a trade, when you're doing a chart selection. Doesn't mean you shouldn't go through it. The practice is good. But before you pull, press the sell button. Make sure that all the ducks are in a line. We're going to go through them right now. The first is a time frame harmony between the monthly and the weekly. And look, there's a few days left to July. This monthly candle closes right here below this breakdown line. This is a clear cut target all the way down. All the way down, right down here. And this is kind of cool. It brings you down to previous swell. That's what I called a previous resistance turn support, where there's a breakout, and that's perfect place to exit right there. 42, around $42, $42.50 if you want to be on the safe side. Man, this is beautiful. Just very, very nice. Is there a trend line violation? Whoa. Remember, I just applied my chart trading framework on the monthly candle chart. I don't do trend lines. It's fun trend lines to know if there's a shift in the momentum. Is it going to go sideways, correction, whatever. But when I do my chart trading framework, it's simple. See, there's no indicators, nothing. It's pure identify resistance, identify support, multiple tests. I trust that more. And after that one, there's a breakdown from that. Measure and move, add it to breakout line, then do a profit target considerations. If there's no resistance along the way, then this is just A++ setup, guys. All right, let's do the stand. Stand. Zoom. Okay, what do we have here? Ooh. Up, sideways. Remember this green zone? This green area is highlighted on the Mansfield Relative Strength Indicator when the Mansfield is above the zero line compared to the SPX. When you're above the 30-week moving average, and when the 30 moving average is inclining. If any of those conditions disappear, then you become gray zone, which corresponds pretty much to a stage 3 or stage 1. And when it's red is bad. Red is you're below the zero line. The 30 moving average is declining, and you're below, the price action is below. So that's the recipe for a stage 4 disaster, guys. What are we going to look on top of that? Well, first we want to be out of the Ichimoku cloud. This is a support, so we're not out yet. This might pull back, might play a little here before giving away. So might hit here, and then might go back here, and then out here. Even if we have a monthly defined breakout, doesn't mean that's going to reach in one candles, right? On the weekly, the more you zoom in, the more there's going to be some wiggle, more hitting some weekly defined resistance. And even if in here there's daily defined resistance, not as strong as the higher time frame resistance, but still going to slow you down just a little bit. And after that, it might go down here. What would be kind of cool is in the meanwhile is if we could get crescendo. I used to think that you needed twice the average volume on the breakout candles, on breakdown candles, but of the previous 4 weeks, but it's not the case. Just fear itself. You're in your account, you see you're holding Dollarama long, you see that, and you start panicking. Back in the days, like Stan said, call your broker and sell. That's how fast panic sells in, guys. So you don't need much. But what he says ultra negative is crescendo volume on the red candles. So if they start picking up and you're in these conditions, if they start picking up and you're in an uptrend, Not too much to worry about. It's not as damaging as if it's picking up here when you're already below 30 moving average, but it's declining, when you're underperforming the SPX. But that looks like a nice top, guys. We saw in the monthly. Look at that nice curve. I really like the pullback. There's less pullbacks to breakout lines on stage 4 because of the fear factor. Usually when it starts dropping, it drops and hits hard. So we're going to see what happens here. There's still some unresolved stuff right here before we get in, especially that support right there, that cloud. And we'll see. We have a few more days on the weekly. Maybe the price can revert back up before. Look, see that line? That wick? Could happen, guys. Price action could revert easily in a few days. Go back up here and just need more time to gyrate. But the trend, the weight of all this is starting to go down. That's a technical construction. And that's why, as Stan says in his book, when the market crashes, they'll find any reason why it crashed because of mortgages or subprime or whatever. It crashed because technically the price cannot be supported anymore. When you have this high mountaintop, when it climbs slowly, that's healthy. I've noticed stage 2s are small, low volatility. It goes nice up and not too much of a steep angle. That's healthy. Could do that for a long time. But when it starts going up, angle of the trend goes higher and higher, and then you start getting these more volatility. Here, this is a top weight, guys, and that could make it crash down, or you have to let it go sideways for a long time until the market figures it out, and then you could start another rise. But this is weight, guys. Poof! Just see it like that. It's like holding up a stick, right? The heavier it is, eventually the tip breaks. Same thing here. That's all cool, guys, but you know what we're doing now? We're doing also the forest to trees. So we did top to bottom, monthly to weekly. We did the stand triple confirmation. We did the Ichimoku cloud for that extra confirmation. Dollarama, where is it? Dollarama is TSX, consumer cyclicals, discretionary, and industry discount stores. So let's go check that out. TSX, where are you? So it's part of the TSX. We've seen this a few times. It's presently underperforming the SPX in a stage 3. Not quite. If it sticks above here, monthly candle, I'm really see the next few days. I thought we had a monthly candle breakout here. Still have it above this level, but we have to see if it closes below that. If it closes below that line in the next few days, not super healthy. Be considered a false breakout. So we got to take a stage 3-ish. I'm not too. You have to take a step back. So it's not a stage 4 disaster like I always. This is a stage 4 disaster right here. See how that candle's closing below. For the venture, TSX not quite there yet. Let's go check the sector, guys. So that's neutral. That's a neutral impact on our trade. We're not fighting an uphill battle. The TSX index that's going to drag you up. But you don't have also the help of a stage 4 disaster helping you. So you could be one of the leaders of that stage 4. You're like one of those that are declining instead of advancing. And we saw with my analysis of the advanced decline, the New York Stock Exchange, advanced decline, less and less stocks advancing versus the declines. We're even approaching negative territory. But the SPX keeps going up. What does that mean? That means the money's flowing from riskier stocks into blue chips, guys. It hides the problem. It always hides the problem. I guess that's why people never see the crash, because the SPX keeps going up. But what's happening is just a few of the stocks are taking all the money and driving it up. You have that unhealthy condition hidden with the SPX price. So always look under the engine, and you'll see with the advanced declines. You can look at the sectors. Also notice all the sectors in the TSX, most of them, only 3 out of the 8 are in stage 2s. Like discretionary, it's looking good, guys. It's on the monthly candle breakout en route to target, so that's not helping us for this short for Dollarama. That's why we might need a little more days to figure it out. Still, discretionary still outperforming the SPX, so that's kind of healthy. You don't quite want to be there. Had a breakout, pull back to breakout line, and then after that, well, that secondary breakout here, it's not quite going there, so, but still in stage 2. But you don't want to be buying customer discretionary stances when the Mansfield relative strength is going down. You don't touch. You have to wait until it pops back up. And when it pops back up, that means there's a lull here. It means you had a green candle. And that's maybe an indication that you want to buy if other conditions are there. Breakout line, volume, etc. So discretionary not really helping us. Let's hope for a downturn if you really want to short Dollarama, or else this might pick up and help Dollarama go back above those breakdown conditions if this really goes above these levels right here for discretionaries. And let's drill down industry, guys. Last one. Where am I looking for? Oil services, specialty stores. That's the best I could find. So kind of confusing on TradingView the way they name subsectors, industries, man. There's a lot of overlap. Don't always get the tracker I'm looking for. And this kind of looks like discretionary, I guess, because specialty stores are essentially a lot of discretionary stuff, I imagine, in there. Stuff you don't need, could cut. So this is in the stage 2, outperforming the SPX, having a down phase right here, broke out this bottom pattern. 1, 2, 3, 4, 5, 6 weeks later, came to touch back, and then continuing again, but not quite going out. Let's check it out like this. Trend line 1, 2. We have to see what happens this week, guys. If it goes back below here, a few more days for that. Check on the monthly. So for Dollarama, guys, the short, you can't just short it now. You have already had the clue you wanted to wait for the monthly candle close, and you're having these clues that the sector it's in might keep it afloat, guys. Even here, you see that? Let's move that, steal that. There's already a breakout in progress on the monthly candle chart for the industry. But remember, the industry is less important. It's the final step, right? What could really drag you up is the index. After that, the sector has some weight, more weight, and then this is just a lot less stocks in the industry than in the sector, than in the index. I'm wondering if this was a target reach and now it's going to pull back down. Don't know. We have to wait. We have to wait and see how this pans out. Was this the breakout here? Remember, the closer pattern to the breakout line, or there's the more tests of the breakout line, I trust more. So if it just goes up and there's not many tests of that breakout line, that resistance here, which I thought was super important, is not as important. Target would have been reached. If this was the breakout candle right here, 1-2 months later, it's reached. That's it, guys. Dollarama. Let me just pop you back on the screen. Stage 4s. Part of my list here. You kind of see here. You could cheat. Keeping an eye on other stocks where I think could be good stage 4 candidates. ABX. Let's put on the stand. Stage 4 candidates. GUI. What does that look like? Yeah, maybe. Underperforming. Keeping on them, and when I really see one that's really like gets a lot of clues, that all that's left is to check the sector, the forest to tree approach. Look at that. That could be a stage 4 disaster. Rocky Mountain dealerships. Below 30 average. Went through the support of the Chuku Cloud went back up. Still underperforming the SPX. Timber. That could be it. And the CFW. I don't know what happened to this one. It used to be in the stage 2. Kind of liked it. After that, it just... you had some exit signs. And now it's just going in red territory. Even the crescendo volume, red candles. That might be a podcast next week, man, on the CFW. Oh, that's it, guys. Keep an eye on Dollarama, man. Look at that. Looks like a nice top, right? See ya. Ciao.